Hello there, traders. Welcome to today's Friday's market wrap-up session. I'm Ken Simon with you from the Bretton Academy, Bretton.academy. And this is just to remind you guys that we have these weekly webinars through Bretton in collaboration with TenTrade Academy as well. So then we are actually having the analysis preferred onto the TenTrade platform or M5 platform. So most of our analysis, especially technically for the education side of things, especially the webinars or even the courses and all that in the future, because it is still on beta mode, it will be through the TenTrade Academy or TenTrade.academy. That basically means that all your tools for analyzing the markets with lot sizing, as well as heat maps, correlation tables, lot sizing calculators, and various others are all centered as a hub of your analytical tools section within the TenTrade Academy. So that's just an introduction. So just to remind everyone that we will usually start maximum 11:30 a.m. Cyprus time, and this will happen every Mondays, Wednesdays, and Fridays. But we've got a special session on different topics as well, specifically for TenTrade, and that will be at 12 o'clock Cyprus time every Monday. But these webinars runs weekly will actually be running just as it has been running for the past year and a half, every Mondays, Wednesdays, and Fridays. So as I've mentioned to most of the traders, I'll tweak a little bit on the approach in the first half of the webinar. Usually what I do is we go through market sentiments and stuff like that, but it's been quite active amongst traders who actually look for trading opportunities on a daily basis. So what I would like to do from today onwards is to actually go through trading opportunities that I have researched in the market the past couple of days, or even for today itself, the start of the market open. So what I will do is to lay out some trading opportunities, whether they are, for different asset classes, but mainly currency pairs, as well as gold and oil as well, right? So we have got a list of pairs that I would recommend for you to look at in terms of trend analysis, as well as considering it as trading opportunities. But I want to analyze these ones with you technically as well, especially technically, because I've done the groundworks of fundamental analysis already, and we have got some interesting pairs to actually look at for trading setups and trading opportunities, whether as of today or the beginning of the new trading week. Okay, so let's get on that more, but all your tools, news, various other things, especially for your daily analysis, will all be centered within the TenTrade Academy for traders of TenTrade especially. Okay, all right, guys. Now, I must say that these webinars will be delivered by myself mostly, and also in collaboration with our trainers, certified trainers under ATI or certified accredited by ATI. So they will be the ones helping me as well globally to conduct webinars, and also on-site trainings and seminars and workshops as well. Okay, so it's been delivered by Bretton in collaboration with TenTrade Academy as well, and also, of course, all the accreditation by ATI London. Okay, it's an association of traders and investment in London, and it's a non-profit organization. All right, let's get going, guys, and let's take a look at the chart. And I just have some pairs that I would like us to focus on today. Of course, we've got the Euro USD. That's always worth for us to give us a bit of a generic market, mainly because it's the most traded pair amongst all the FX classes, FX currency pairs. So we will look at Euro USD, but one that jumps out most is the GBP crosses, and in particular GBP CHF and GBP US dollar, right? So GBP, because of the driven factor by its very, I would say, cloudy and bad numbers in CPIs and various other data, especially economic data, and that's number one. But also because of what has actually gone on in the news as well, there's a lot of forecast of gloomy times economically especially, but also politically and some geopolitical factors as well with that. So that actually gives us the opportunity to scout the market and do a bit of a trend analysis and to look at whether or not we have got a clear downtrend, probably because of all the impact that is going on at the moment on the UK's economy. Okay, I hope you guys can hear me loud and clear. Got it recorded as well. So let's get going straight away in looking at whether or not we have got a clear, smooth, and strong setup based on the trend for GBP CHF. I'll go straight on to GBP CHF, move the charts, basically all the whole process of the price, cherry pick some currency pairs, and we'll look into gold as well as oil, but I want to look and focus on pairs that we can actually trade either intraday for today or basically monitor it for future trade ideas as well as trade signal where you can actually just get into the trade once it has triggered some of our expected prices. Okay, so now let's take a look at GBP CHF. I know we have taken a look at GBP CHF as of a week and a half ago, and it has definitely gone through the direction that we have predicted and forecasted, as well as triggered the price that we have talked about and also hit the TP that we have talked about because of the increasing momentum to the downside. And that momentum to the downside has already been spotted about a week ago from just doing a trend analysis. So this is now coming through to become stronger and clearer as a downtrend. But let me just give you just a little bit of trend analysis that I've done. And basically, as you can see on the 1 hour chart, we are looking at price action at the moment at the 1.1390 area. Now, because it is at 1.1390 area, it's got two psychological levels that we need to be aware of. To the upside, it is the 1.1400 psychological number. To the downside is the 1.1380 psychological number, right? So what that means is that I would prefer to look at entering the market only after prices for GBP CHF has gone under 1.1380 psychological level, at least by 10 pips. So I would be looking at only entering the market only if prices were to fall further and reach the 1.1380 and below. So below meaning 1.1370 at least to be a good trigger point or a good ideal or an ideal price of entry for a sell for GBP CHF. Now we're just looking at the 1 hour chart. From the my perspective, the 1 hour chart is still giving me the bias of a downside pressure, right? But of course, with the way that the can price further down by selling and exhaust, that's what I can actually sell, that's financial moving averages. We can see that the biases to the downside because of the cluster of candles moving under all three lines, but the three lines itself is not really moving in a clear manner, meaning that they are not three lines having a downward slope that is a little bit steeper going downward. So it's not really that clear. So hence the reason we are actually being alerted with the current candle as well, exhausting to the downside. So what we need to do then is to look at the 4-hour chart. When I look at the 4-hour chart, the 4-hour chart is giving me a good indication that anywhere between 1 hour to 4 hours time from now, it has some clear direction that it wants to go to, because that wick to the downside is not as long as the one that we see on the 1-hour chart, which basically means that there may be a chance for it to actually go down further. What I would do at this stage, of course, is to insert the ADX indicator, which stands for the average directional movement index. Okay, so if you go into trend, you go on average directional movement index, and you just need to have under the level 25 added on it, and you don't need to change the other period or anything else. So then you just click on that one there. Now, what I can see is that it's got a cheeky, sneaky peak of the blue line above, just slightly above the 25. So that does also give us an indication that it's not really weak in terms of its downtrend, but it's got some capabilities of picking up. So then I would compare as well and look at the daily chart. Now, when I look at the daily chart, it's got many angles from the 3 lines, exponential moving averages, as well as the ADX, as well as the cluster of candles. Everything is giving me a clear indication of a strong, smooth, clear downtrend for GBP CHF, especially on the daily chart. Okay, if I just go into the weekly chart as well, it's still giving me that hint of more room to the downside. But daily chart is giving me that hint that it's really clear. Is quite strong, especially if that would actually be hinting us that that pickup of trend could be from medium to long term, which basically would give us a better, clearer idea from Monday onwards when Monday opens up, right? So this is my sort of opinion and suggestion to look at GBP CHF as a potential trading opportunities. And what I will do right now is to also look at the 4-hour chart. I prefer the 4-hour chart to make my further analysis on it technically as well, and then I compare that to the daily chart, of course. Now I have cleared, would like to clear the ADX indicator right there. We don't need it anymore as of now because we've compared 1 hour, 4 hour, daily. Now we've got a strong indication in terms of the mother candle, that is the mother candle of the current moving candle at this moment of time is proving to be reasonably strong. And if you look at that particular candle on the daily chart as well, it's picking up quite well. Now, I like the nature or movement of these candles, especially the current candle, mainly because it's got no wick to the downside as it's moving, but it's got a wick to the upside. The wick to the upside says that it's weak to go to the upside, but then it's not weak to go to the downside. And that is further confirmed by the ADX as well, especially on the daily chart. So I see that there may be great opportunities. What I would like to do now is to always look to the left as well. And I want to look at a reference point to the left of previous movement, especially like this one here. The most recent one that I can see is this one here, based on the movement from the 18th of March 2 years ago onwards. So I want to zoom in on this area right here, because the current price has cut through, the current price, which is your thin white line right now, is cutting through this price action of the past 2 years ago, and it is within a bearish mother candle. Now the trend as of now, it's looking like it's biased to the downside, so it's bearish, the GBP CHF. So because it's bearish and because it is actually running through, cutting across from a bearish mother candle as well, I would like to make that mother candle of March 2020, especially the body itself, to be a reference point for further price action, and also to help us plan. Now is that, in my opinion, just looking at this price price action of these class of candles, here's mother candle right there, I can say that it has a potential or a probability to actually drop further down in the size of what do you call that, closing price of that bearish mother candle. So that gives us a potential of about 180 pips or so. So I would say 150 to 180 pips is a potential for the price to actually drop down to, and that is the closing price right there. Also a bounce of price to the upside. So that is basically the potential. Now, looking at the price at 1.1382, I would look at the potential of entering the market only at 1.1370. Okay, so what I would do is give you guys that head start in considering a good price or an ideal price of entry of GBP-CHF for the sell at 1.1370. Okay, so let's do that. 1.1370. So that would be the ideal price of entry. Okay, so just leave it there. So you're reminded of that. Now, what I will do next is to mark, just probably use a green line to mark that 1.13770 as the ideal entry price for a sell for GBP-CHF 1370. Okay, so then change color right there to green and at that price. There you go. Okay, so you have the choice of either 1.1370, or if at all you are looking at being more conservative, for example, you can actually enter at a lower price under the 1.1350 psychological level, which basically gives you another opportunity to enter the market at a lower price at 1.1340, because if you're having the 1.1350 as your referral point as a ideal psychological level, then you want to enter a sell at 10 pips under that level, and then you want to open another trade, two trades, one at 1.1370 and the other one at 1.140. Now, because the price here expected for that reversal is at the closing price of that mother candle that was marked at 1.1187, right? So 80 is that psychological level. So you need to exit 10 pips above the 80, which gives you a 1.1190. So what that means is your take profit, I'll mark that as, let's say, a blue line as a support, potential support as well, at 1.1190. Okay, there you go. That's a better ideal price for exiting or take profit. Okay, so this is it. 1.1190. So 1.1190 would actually be a better price. So that gap there, if you are taking the price or you're entering 1.13 second, 1.1270, then that gives you roughly about 175 or 170 pips or so. So if you're taking your price at the 1340, being more conservative, for example, then your price would actually be, your take profit potential will actually be at 150 pips. So you've got a potential, depending on your entry price as well, ideal entry price, either between 130 to 160, I would say, pips. Okay, so that's the safest minimum average number of pips in terms of your profit potential. So if it is 130 pips minimum for profit potential, then you would need to look at least 130 to 150 pips as well as your potential stop loss number of pips as well. Okay, so you want to be careful and ask questions to yourself and analyze, evaluate your risk and money managing areas as well, right? So there you go. We've got that. So what that gives us is, of course, if it's 130 or so pips, then you are looking at your stop losses. Okay, let's say this one here, 1340. There, 250. Let's say when we make 150 pips at 1.1495, let's say, or 1.490. Right? So that all depends on how much pips you want to actually make. So you can use that one-to-one risk-reward ratio as well, but you want to give it a little bit more room and space, mainly because we're talking about GBP CHF. You know, discount the not discount, but you want to consider the spreads as well, and various other volatility aspects of this currency pair. All right, there you go. So that is your GBP CHF on the daily chart. But of course, it's applicable. You want to go on to lower time frames as well and analyze that space. That space is at the green lines, between the green lines of entry prices to your take profit potential areas. Okay, so this is basically it. Now I'll leave the thing there. Areas right here. So I'm going to bearish area for your trade with ideal entries and exit for GBP CHF is marked right there. So like I've mentioned, you can either enter at 1.1370 or you can enter a little bit lower as price goes down. That would probably be next week onwards at 1.1340. So two prices. If you want to enter sooner, then basically you take that up price of 1.170 area. But again, today is Friday. You want to trade wisely, carefully as well. You don't want to get surprised or surprisingly attacked by the unexpected gap down or gap up, for example, in the markets on Monday. Okay. All right, there you go, guys. You got GBP CHF right there. I'll be conducting this kind of approach to all the webinars where I will, analyze in advance with my team on various pairs, various instruments as well. Anything that is hot coming up that you should grab into as well. We'll do a impromptu webinar as well. Okay, so then you guys will be informed on any trades that you guys can take, which most of the time are high probability low risk type trades as well. Okay, guys. Now let's look at GBP USD as well. Now, we also talked a lot about correlate gives you more chances or more pairs to actually trade. So that could easily one pair and cherry pick it properly according to what the big boys are doing for the day, and then you diversify or you increase the number of trades by actually trading correlated pairs. Correlated could be positively correlated or negatively correlated, but they move the same sort of ways, and basically factors that affect one will affect the other correlated pairs as well. Okay, all right. GBP USD is looking not too bad at all, but I've got my stochastics here. I don't need my stochastic at this point. What I need is the ADX. So the ADX is your average directional movement index. Oops, that's not the right one. Give me a second. Oh. So we want to look at it at three levels. Now on the daily chart, it's really good. GBP USD, it's looking quite clear and strong to the downside. We've got cluster of candles, bias to the downside with bearish action going on. We've also got the ADX on the daily chart with the GBP USD above the level of 25. So moving moving in a very nice, healthy way as well. So it's giving us the hint that from 4 hours to 24 hours time, we could experience an increased pressure to the downside for the GBP. So that basically means a trend will probably be up, okay, from medium to long term especially. Now, if we go back to the 4-hour chart, we could see that not that clear on the 3 lines, but still it is on the downside. 1-hour chart's looking not too bad at all. So I think because GBP CHF is quite correlated to the GBP USD as well. So I would think that it's got similar type mood in terms of its trend as well, right? So here we do the same thing. We zoom out a little bit and we look at our referral point. As you can see, it's quite similar to the GBP CHF, and we've got that area right there. I will take this one away. Okay, so we've got the referral point of previous price action and candle as well. Let me zoom in a little bit. Okay, because we've got current price at 1.190 as well for GBP USD. It's just cutting across that very bearish candle body of that bearish mother candle as well. So we'll use that as well. So we get a bit of a zone where, so then we've got the closing price as well right here, and we have got that very interesting price action that sort of mirrors or mimics the movement of that class of candles that we have seen on GBP CHF as well, right? In March 2022, March 2023 years ago. So that was for GBP CHF. Let's look at how far back this price action was, and surprisingly, not surprisingly, it's also 2 years ago in March. So that basically means that it's got a high correlation between the GBP USD, the GBP USD and the GBP CHF. So here, for example, we're looking at the potential of it, and here we look at, we go back to the current areas. You can see that it's got some more room for it to actually fall, and it's in the size of about 300 pips or so, potentially go down, right? But what we need to do is we need to look at resistant areas, like for example, this area right here. Of course, we have got, I mean, most recent to the left that we can see based on the daily chart is this one here, right? So we have got this area that could prove to be support based on that valley area right here. So what I prefer to do is mark it as blue to signal a support area or support level. Okay, all right. Now we have got it here. Now we've got it there as well. So this is for GBP USD, and it's based on the daily chart that we're looking at, because daily chart gives you clarity. You base on that one there, but we are only doing a trend analysis, a bit of price action analysis as well, but not yet a technical analysis, right? Only trend analysis. Now, if I go back and I look at that area again, the area that I've drawn the blue lines to mark possible support area, then I could see that it is at 1.1816, which is really close to 1.18 psychological level, which basically also means that if you are already trading your GBP USD right now, you can stay on it, but you need to exit at 1. At least, because it would actually be bound of the area of 1.1750 area. Okay, so these are all psychological levels as well, incidentally, right? So we need to go back to the left and look at price action in this area right here. We've got a slight area of bounce at the 1.1732 area as well, because of the opening price of that candle there you go. Now, what I can see is we still have some potential down the road for GBP USD. But if you are already trading or you wish to trade, then it's probably best to actually trade, enter trade if you have not done so at 1.1870 just to be at the safe side. And then what we can then do is to then exit at 1.1830. So that gives you a 40 pips potential. That could also be a 40 pips SL amount of pips as well. If you want to look at your one-to-one risk reward ratio. If you look at it at that angle, then it would actually be least risky for you because you are summing up the number of pips in terms of profit to the sum of pips in terms of risk that you are willing to take. So if it is 40, then 40 as well is your stop loss or risk level. Then it looks like it's reasonably low and you can take your trading in stages as well. And then you re-enter the trade again later on after that has actually hit either the SL or the take profit, for example, and then you can gauge the market to be more stronger to the downside or it's actually more potential for a reversal. So this is how we could approach the market, especially, right? This is for GBP USD. All right, guys, so that's basically it. What I'll do is I'll give you guys a bit of a sneak preview onto gold as well. Now, gold has got some correlation or negative correlation in some way or another with movements in cryptocurrencies as well, especially with Bitcoin and Ethereum. Now, Bitcoin and Ethereum is expected to have a bounce quite soon, or a correction, we can call it, to the upside. So that could be a trigger as well on some geopolitical factors that in the US, and especially if it is geopolitical impact to gold, whatever happens in the States. So in that way, what I would say that is happening with gold right now is quite unpredictable, but it might actually give us a little bit of a surprise a bounce to the upside. Right now, how much and all that we don't just know as yet accurately, but there is a potential for that to happen because of the bounces expected with Ethereum and also Bitcoin. Right, so next week is good for us to monitor, especially from Monday night itself, to look at all the price action that has occurred from the States, especially, and also from the Eurozone. So Euro process as well. Then we can actually gauge and look at what could potentially happen with gold. Now, with gold, we have indicated the potential of a lower move, basically moving bearishly downwards towards 1745. So I would say 1746 or so, and that would actually be an area of a potential bounce. So what I would like to do right now is to just clear off all the indicators first. These ones, objects. So I'm going to start afresh with looking at it from the daily perspective. We have got the sideways type sentiment for gold. So the longer it goes on a sideways, the bigger the impact of a breakout would actually be as well. But it's not a very clear moving sideways. That is basically the challenge right there. But it looks like it's got more higher lows basically, and if we use various principles, we did have a complete 5-wave right here, if those who like Elliott theories as well, and that bounce right there is making the ABC type move of the Elliott wave theory, Elliott wave movements. So with that, it does look like a potential upward move right here that would actually complete the C movement of the Elliott wave, Elliott waves. So what I would look at as well is once it has completed pattern to look at or not, it could pierce through all these three EMA lines as well, right? Or use these three EMA lines as potential resistance. So this is where it is a little bit wishy-washy on what could potentially happen to gold, and hence the reason for me personally, and for some traders as well, who are on the conservative side, not to actually get into gold trade as of now, just so that it gets better momentum and clarity next week onwards, right? So there you go. Because a lot of retail traders, what they are doing right now is they are just putting their place, pending orders, or they've already started trading. It could potentially be a little bit too early. Now here on the 1 hour chart, we have got a nice sort of ABCD pattern right there, and this one here was quite a nice one, and it has been going on as predicted as well, very nicely. So this is how it here. Second. So we've got the AB line right here. Okay, that if you mirror that and click on control, you basically have a line right there. That end of that line is your CD line, and the end of that D there, it gives you the indication of how far more could the price of gold go to at the 1750 area before it actually bounces upwards. Now that is based on this pattern right here, right? This is called a bearish ABCD pattern. Now, when we use the ABCD pattern and convert it into a geometric ABCD pattern, all we need to do is to have that A to D line drawn. And once you draw that A to D line, then you've got a complete geometric bearish ABCD pattern, giving you an area or a possible suggested entry area at the cross right here, at this cross area, right? So here, for example, area under 1765. So that's where I would trigger my sell entry right there under that line, and then take profit before it reaches the 1750. Area right there. So a little bit of room, but to exit before 7 is at this low we have in areas of support that is really significant. So here I can see that you have got a closing price of a mother candle right there, bearish mother candle. You've also got an opening price of a bullish mother candle right there. So perhaps it would actually be bouncing upwards a little bit sooner than 1749, right? So you want to be careful if you are already on a sell for gold, especially because there may be a bounce to the upside coming quite soon, right? So and I see a lot of hints of that going on. And what we can also do is look at the daily chart, for example, the 4 hour chart, and then you can insert your stochastic and look at whether or not you have got a divergence, basically a mismatch between price and your stochastic. So here, if I use my stochastic right there, it looks like, yes, we've got a very clear divergence, of course. Here on the daily chart itself, we've got the high there, and then we've got lower high. But then the similar areas, based on the stochastic, for example, this area here, and then to the peak, that is an upward movement, upward slope, and then downward slope on the candle. So that's a mismatch. One is on the downside, one is on the upslope. So that basically does not match, and a mismatch is called a divergence. Now, divergence, when there's a divergence going on, then it hints us, not certainty, not 100% accuracy, but it hints us of a possible turnaround of price, right? So there you go. This is it. If you want to look at this area here as well, we have got it moving upwards to the current price. But then if you do that similarly around here, that is a downward trend. So that is definitely a mismatch, a very clear mismatch as well on the chart. So that is hinting us of a potential reversal of price at the moment. Okay, there you go, guys. Right. So let's get back to the 4-hour chart. So it is really really close to reversing. Okay, guys. So that's all I have for you guys. We just looked at the three assets. Three instruments right there. That's all I have for you guys today, and I will be recording more trading opportunities type short videos as well as the market is active on Mondays onwards, and at any moment of time when we in a team have actually scouted for opportunities, researched the market, and we bumped into trading opportunities on the spot, we will be releasing a very short video giving you that signal straight away of how to take advantage and trade the instrument as well. All right, guys, thank you very much. Now, being a Friday, I wish you guys to have a great Friday, but a greater weekend for all. And God bless. Thank you very much. And we'll see you guys on Monday. Take care, guys. Bye-bye.